All right, guys, just give me a minute. Let me ping my Discord so they could join us. Okay, let's go back here.
50%. Stocks down more than 30% since it went public via SPAC back in April. Joining us this morning here at.
All right, guys, let me know. Give me an indication in
Welcome
chat
back. Shares of
if you can
trading
hear the
platform
audio.
Webull are lower on the heels of Q3 earnings, despite customer assets jumping to an all-time high and revenue growing by more than 50%. Stocks down more than 30% since it went public via SPAC back in April.
I can't share the
Joining
video.
us this morning here at Post
Doesn't
9
work.
is Webull's U.S. CEO Anthony
Only the
Demir.
audio.
It's good
There
to
we
have you
go.
back, Anthony.
Thanks for having me back.
What's all the volatility doing to the model right now?
Retail loves volatility. So Webull's platform was built for active and sophisticated investors. This is where our platform really shines. We're seeing volumes hitting record numbers through October, and now we're halfway through Q4. I'm very excited for what's ahead for us.
Do you think the volatility sort of continues from here? It's hard to imagine it smoothing out.
You would imagine there is going to be some smoothing, especially as things quiet down into the holiday season. But short-term active trading platforms like Webull, volatility is really what's key for us.
You've also installed a more diversification, right? Corporate bonds too.
Yes.
How much of that is going to be part of the business?
Corporate bonds help us on a couple different scales. As the market gets volatile, we see a lot of retail looking for a bit more safety. So offering corporate bonds, offering U.S. Treasuries gives another product that retail can feel a bit more safe and have their money invested. On the other side, it allows us to bring over larger assets from competitors. High net worth investors tend to have a diversified portfolio that include corporate bonds and U.S. fixed income. Now that we offer those products, it's a lot easier for us to transfer over large accounts to Webull.
Why is it that retail likes volatility? Is that a newer trend, or is that something that has been kind of made possible by companies such as Webull and many of your competitors?
A little bit of both, right? So retail loves momentum. They love opportunity. And volatility creates that opportunity for retail. They're constantly chasing the biggest movers on the day and constantly looking for that speculative opportunity to make real alpha in their portfolio.
And then if volume trends are so strong right now, why do you think your stock is down 4%?
A couple different reasons. We just went public in April, right? Went public via de-SPAC. October 8th was the full liquidity lockup, right? So all shares are now tradable since October 8th. Outside of that, we've only reported 3 quarters. Mind you, every quarter showed profitability and growing profitability every single quarter. We'll continue to show growing profitability going forward, continue to execute on our goals of expanding geographically, expanding into new products, and we're here for the long term. We're not here for a 1-month run on the stock.
How do you see the kind of competitive marketplace shaping up right now? You mentioned the new product lines you've been getting into. Is it one of the situations where everybody can kind of grow together, or do you plan to really capture share from some of the other marketplaces out there?
So I've said this before on this show. This is the most exciting environment ever that I have been in this industry now for 26 years. And I've never seen a regulatory environment being very comfortable with new products, whether it's crypto related, whether we talk about prediction markets. So I think it's a mix of taking advantage of new product to attract a whole new addressable market with customers and using these new products to re-engage customers that may have gone dormant. So I think you're going to start to see some separation of platforms like Webull that are embracing new technology, they're embracing new products that's going to start separating and leading our upside.
You've mentioned new products, new technology. You've got an AI product, right?
Correct.
What's it called? Vega?
Vega.
What does it do?
Well, Vega is named after the brightest star in the Northern Hemisphere, right? Sailors would guide their ships by it historically. It does a lot of things. It's a virtual trading assistant. Not only is it able to analyze your portfolio in intraday risk, telling you It's also giving you insight into implied volatility in options contracts, right? Where is their opportunity? It's summarizing news flow. Today's retail investor has more information than they've ever had, whether they're watching shows like yours on CNBC, whether they're listening to podcasts, whether they're going through Reddit channels. And sometimes it's just like drinking through a fire hose.
Sure.
This AI technology consolidates that information and makes it easily digestible for retailers, making more actionable.
Is it actual tradable ideas, or I mean, what is insight?
We're not to the idea generation yet,
Right.
skirting the line of recommendation, but I am confident in time you are going to start seeing a bit more AI doing that. And I do truly believe that AI is going to revolutionize investing in the future.
Does AI have a fiduciary duty? I mean, what is the accuracy and what are kind of the regulatory guardrails around something like this? Because I mean, most of the models, they're pretty accurate, but not 100%. I just wonder if someone's putting their own money to work in the market based on some of the recommendations or based on the ideas. You want it to be probably 100% accurate, right?
Well, everything has risks associated. Whether you're giving customers the opportunity to look at different bond portfolios, there's risks associated with bond portfolios, as we all know. So nothing is going to be 100% reliable. And what we're working on, we're working with the regulators, we're working with our compliance teams to make sure that the AI returns that customers are getting in their feedback is not only addressable, but also reliable, using as many sources as possible, and most importantly, showing where those sources are coming from to the customer immediately when they get the results.
Right. You think eventually, like industry-wide, it's AI model trading against AI model, and those are the counterparties?
There is going to be a little AI competition.
Yeah.
I think everyone has a different angle on what their AI wants to do for their specific customer base or their specific platform. Webull is a more aggressive platform when it comes to sophisticated traders. We're seeing our traders trade a lot more than a typical trading platform, and so our AI model is specifically skewed towards showing opportunity for active traders.
How many average trades a day, roughly?
Average trades a day in terms of shares,
Yeah.
in terms of notional, probably doing about 3.5 billion in notional a day in equities, trading about 3 million options contracts per day. And that flow is coming not only from our U.S. customer base, which makes up the majority of our customers, but we have a global business that's
Australia,
trading those products.
yeah.
14 overall.
Right. Fascinating, right? Just the environment we're in it is pretty
very
amazing.
exciting.
Anthony, thanks as always. Good to see you.
Thanks for having
Anthony Denier, Webull.
Thank you.
All right, there you go. That's the interview that just happened on Webull. In our earlier Discord live stream, I was calling out $8 zero DT calls at 6 cents. I didn't go for them. I tried to. I put the order in, and then the bid went to 7, and I canceled it. I did go for the 750 calls. I got those 6-7 cent calls now 25 cents. The 750 is about 37 cents. I already sold it. I've been selling it on the way up. I still have a few more. That's just a cute little trade. I have a big common share position and some January $10 calls I bought this morning. Unfortunately, I'm getting raped with my Q short, though. On the live stream, I did call out IWM calls right over here at 232. Some people killed it on that. Unfortunately, I just gave the analysis an idea. Didn't kill it on that. So these are basically my two main plays today is long Webull, short QQQ. So right now I'm taking it on the chin because the long Webull is down at 0.8% and the QQQ is up. But listen, I called the inflection points in Carvana, Palantir, Hood, SoFi live on this show a couple years ago when those inflected in the single digits. And I'm on record saying that now Webull has reached that same inflection point. I tripled my position in my retirement account last night on Webull. And I think Webull is going to be in the 20s in 2020. New Robinhood, I think percentage-wise, you're going to make a lot more on Webull than you will in Robinhood in the year 2026 after this inflection point. And I think it's going to become a cult stock. And we're out there on record, and we don't mind some people giving us criticism, but I don't care if we're leading, a retail army of a stock that deserves it. We're only trading at a 30 PE on a very fast growth stock now. It's the trading at this point at least 50% of the multiples it is on Robinhood, and maybe that was deserved earlier when they didn't have this type of growth and earnings reports. But let me just summarize from our morning note that we did for our Discord here, how they did on that report. Here we go. Bull reported a strong Q3 with adjusted EPS of 7 cents, beating 2 cent estimate. Revenue of 157 million, beating 136 million, powered by 64% year-over-year trading revenue growth and customer assets up 84% to record levels. Global expansion options and equity notional strength, renewed crypto trading, and launch of Vega AI, which you just heard about on CNBC, drove higher activity while profitability scaled meaningfully faster than expenses. Take 7 cents, annualize it to 28 cents, and you're trading at a 30 forward PE on any metric at this point. It's trading much cheaper on Hood. Now, maybe, again, that was warranted when Hood was much smaller. People didn't know. I mean, Webull was maybe much smaller, not growing as fast as Robinhood. I think that's put to bed now. They are now growing fast. Their revenue is growing far faster than expenses. This company has inflected, and we are going to be the leading voice on this. We've already reached out to Webull to schedule our own interview on X we can have with everyone and story trading for the X community. But let's see if we can get that red to green here on Webull today. It is my largest position, trading position today. I did add $10 January calls as well. And let's see where it goes from here. But thanks for tuning in. If you want to be part of the Webull army, go ahead and look for a tweet in our X account, and we can spread the word to get everyone on the same page here. The retail bull army is quickly being assembled. So just scroll down. I just tweeted it. Let me see here. Just go to our timeline, and if you scroll down, you'll see it. It's like the fifth. It's like the fifth post. Okay, it says the bull army has been born. So what you need to do, scroll down to that post. It says the bull army has been born. All right, bull has inflected to profitability with rapid revenue growth, and we will become the Hood of 2026. I think it will become a cult stock, and all that means is that it's going to be assigned a premium. Right now, it's being assigned a discount. When it becomes a cult stock, it means you have people who really believe in the vision and are willing to hold on to the stock and pay a little bit of a premium. Now, we're undervalued. Imagine if we get the fair value, then a premium on top of that. Why would there be a premium? Because people are willing to hold this long term because they see the vision here that Webull is going to be taking a big market share away from Robinhood as they grow, and they see that Webull actually has the far superior platform, much better. I mean, if you've never used Webull and you use Robin, log into Webull, you'll never go back to Robinhood. If you're even if you're like, maybe like folks who trade like the once a month trade or once a week trade, okay, I could see them saying, Robinhood looks simpler to me. But if you're just a little bit more sophisticated than that, and you're doing like 2 or 3 trades a week, or you understand charts, right? Then Webull is 100 times better. It's not even in the same league. It's not even a fair fight. If you look at the Webull experience and user experience and the tools and the features they give you versus the Robinhood experience, Webull blows away Robinhood like by 100x. It's ridiculous. So now with the financials inflecting over here, I do predict that Webull will become the Robinhood of 2026. It will become a cult stock. It will catch up with valuation metrics to Robinhood, which means it needs to double from here. It needs to go to $15, $16 just to earn the same current multiples that Robinhood is getting. And on top of that, you're going to start seeing faster growth, in my opinion. You're going to start seeing faster growth in Webull in 2026 than what you've been seeing in Robinhood. So thank you guys for reposting the stream. Really nice. So I do unfortunately have to get going. I have a doctor's appointment. I'll be back in a couple hours or so. But in any case, I saw that CEO interview on there, so I wanted to make sure everyone saw that. We'll try to clip that. If you're listening after I end this stream, you can go ahead and clip that. At least it's the audio, not the video. I don't know how to share live TV video. Our platform doesn't let us do that for copyright reasons. But in any case, we'll get that out there. All right, we're starting to get back into the green on our trades here. That little trade we did, those 750 calls I picked up, working out pretty well today. Let me see how I did on those. Let's see. Check my account here. Those 750 calls I picked up I am up on those $1,500 realized, 700 unrealized. That puts me almost at break even now, Webull, on the day. I picked up a lot last night, like a 25% of my account. I kept buying 5,000 shares, 2,000 shares, 1,000. I was buying like crazy in the 830s and the 820s. This point, I'm almost break even on the Webull trade. And let's see how those $10 January calls look, guys. Check out those $10 January calls. Now that, they got some visibility, you know what? I'm going to add to those, because now that they got some visibility here on CNBC, you know what? I'm going to diversify that, get some 750 January calls. So, all right, I'll add some 750 January calls to that. So we got 750 now, just got them paid market price, whatever the heck that was. Fidelity is very good for that. $1.48, just paid $1.48. That gives me a break even of about $9. Oh, that's beautiful. By mid-January, $9. Yes, any tax loss selling pressure that you're going to have between now and the end of the year, that'll be abated. This could be a January effect stock, so you can really see the stock explode in the month of January. I really like those mid-January call options on Webull. $7.50 a great option, $10 a great option. Anyway, we are the Webull Army. The cult stock has been born almost overnight. And why? Because they fundamentally inflected on their financials, and they have the superior product for consumers going up against Robinhood. This is the stock to own in 2026 versus Robinhood. By the way, Robinhood, which I called the inflection point in the single digits, I just sold all of it this morning in my retirement account. Sold all of my Robinhood and tripled my position in Webull. That's how you do it, guys. Good luck, everyone. Thanks for joining the stream. Make sure to follow us on Story Trading. Make sure to scroll down to that post about the Bull Army. Like and repost that. We're going to raise awareness about this superior product and this financially inflected earnings report that just came out, because Webull is going a lot higher. All right. Just keep in mind, if you want to be conservative, maybe go out to January options because of tax loss selling pressure that possibly could affect Webull here in the next 2 months. But how do you not buy an earnings inflection point? You have to. Even in the face of a market drawdown, you have to buy an earnings inflection point. That's what I do best at Story Trading, is identifying individual stock alpha based on individual catalysts. And if it's an inflection point catalyst, I say screw the rest of the market. You buy that. That's what I did this morning. Good luck, everyone. Thank you for joining the Bull Army. We'll see you. We'll try to get the CEO on X pretty soon. Take care. Thank you so much for joining me. Someone hit the outro music. Here we go.